Your take on this particular jobs report?
Yeah, Lisa, I think you hit it on the head earlier in your reaction to the unemployment rate and the labor force participation rate. I think that's why you're seeing, a little bit of negative reaction in the front end of bond curves, a little bit of negative reaction in in equity futures. I think this is a slight disappointment relative to hopes that, this report would give a piece of evidence in favor of the camp that there's a slowdown and a pivot underway. And I think that's going to be disappointed in this report. It's one report. It's probably not even the most important report. Next week, we'll get the most important report, which is the CPI report. But I think in total, that's really the numbers that sort of stand out to me is the failure to see an increase in the participation rate. And that's really about the forward-looking view on wage pressures. So yes, the wage pressures didn't go up, but they're still exceedingly high. And while they stay high, that is the source of the other camp's view, which is that we're in a wage price spiral. So I think it's a little bit disappointing to the dovish camp, a little bit reinforcing to the hawkish camp. Minor on both sides of the argument, but definitely tilting that way. And that's why you're getting the market reaction you are today.
So we get a lot of fund managers on the show, and they always say, we're not trading every day. We're not an algo. And they say, we have a certain approach and we kind of move along. How has your approach shifted as you get the multitude of data that we're getting? And how much are you looking to change it heading into year end?
Well, it's a great question, Lisa. And the issue is the degree of uncertainty here with regards to the inflation outlook. And it's very hard to forecast. So we have a little saying, if you don't have a good forecast, then observe. It's sort of what the Fed is saying in terms of being data dependent. They don't know what the trajectory of inflation is going to be. And so they're going to observe. So it's very hard to kind of trade every little change and turn in the data. We take a step back and we look at the overall trend. And as I just highlighted, this is one piece of information that's a little bit in the camp of the hawkish camp that the Fed needs to do more. But no one really knows where inflation is going to go. And we have expectations, however, in the bond market and the consensus view of a relatively benign amount of impact to the economy for a dramatic decrease in the amount of inflation. And I think the weight of the proof of that being the correct view is on that side of the argument. And so I think it's highly uncertain, and today is a little bit on the hawkish side.